Man, the markets have a really funny way of like playing with you, shaking you out right at like max pain or where your stop loss is or where your liquidation is or whatever, if you're leverage trading, things of that sort, or just where it's just going to piss you off. All right. Where you're like, you don't make much money, or you don't lose much money, or you just get out break even, but you could have made a bunch of money. Right. So the markets are going to do everything they can to extract liquidity from you. You are the liquidity in the market. It's not the institutions. Okay. Bitcoin is way down here, right? And it tapped to 94.5. And if you've been watching my videos for long enough, you know what that 94.5 level is, right? It's this massive kind of like support level, right? So now we're down here at like 96.5. Okay. We've rebounded. We hit off of the 200. We hit off of that level. You know, the markets, they'll do everything that they can to shake you out, man. I'll show you. They got me. They got me. They shook my position out because they took it to past my stop loss, right? So I got taken out. I didn't lose a bunch of money or anything, but still, like, you know, I'm salty that I'm out of my position now because they did set a higher high. And that's exactly why I set my stop loss up there. Because I was like, look, if we set a higher high here, we could be going up. So I don't want to be in a short if we're going up, right? Well, my stop loss was literally within like $200 of the high. And on a $99,000 asset, that's like fractions of that's what I mean. It's fractions of a percent. And like the margin for error in this is so slim that like you can set your stop loss $200 too soon, and then it loses you $5,000 worth of potential profit, right? You don't lose a bunch of money, but you know, you lost potential profit. So, you know, it's not fun. But let's get into the charts. I'll show you exactly why this is happening. I'll show you exactly what is kind of going on the charts and how we can position ourselves, because I still think that this 85K is in play. So before you get your pitchforks out and do all your, you know, burn my house down, just see what I got to say. Okay, so first and foremost, on the 1 hour chart, I'm going to do a little higher level TA on this. We know we had that November rising wedge. We broke below that, okay? And so anyways, everybody knows what this 40 or this 94.5 area was, right? It's the 2024 or the 2017 macro trend. We did come back and kiss that, okay? That's what we needed to see in order for us to like confirm the breakout of that. Now, we have to stay above that, right? We did come back and retest it, and we tested the 100 moving average on the 1 hour chart. Okay. So we did bounce off of that. Now, a lot of people, like, I got stopped out like right here, right? At like 98.9 or something like that. 98.7 something was like where I got stopped out. And literally the high was 98,999. So I got stopped out like $270 on my massively profitable short position that I was like, okay. And the reason why I set my stop loss up here, okay? So this is to prevent losses, okay? That's what a stop loss is about. So I was like, okay, this is the previous high right here, right? This is kind of like the previous high. This is the higher low, or the low that kind of like tapped. Then we had the previous high right here of like 98.6, but we had the previous high here of about 98, you know, 9 or whatever. I said, okay, this is our previous high where we set a lower low. So if we take that out, we're probably breaking market structure and heading to the upside, right? Well, we now have a new market structure that looks like this, and I got stopped out right here. So did I lose a bunch of money on it? No. But you know, could have rode it all the way down here to 94.5 and probably made like 7-8 grand. Which, you know, is kind of, you know, you're a little salty about it, but hey, that's the game, man. That's just how it goes sometimes. So what I saw when and again, I was going to sleep. Like, the last thing you want to do is watch this just blast through 99,000, go to 102, and you're asleep. And then your short's like so underwater. So that's why you set stop losses. Well, you know, stuff happens, right? This is the new low, by the way, right here at about 94.5, right? So we came down, we kissed and closed above the 200 moving average. We kissed this trend line, which is what we needed to do to confirm this breakout, right? Now, if we don't hold this, I think we're going to 85K. And everybody knows why if you've been watching all my other videos. Now, here's the thing. We are outside of this kind of like rising wedge. We're also outside and under this trend line, this upward sloping trend line. Okay, so we know that. We're all good on that. We understand that. We know about the November bearish wedge. We know about the line in the sand that we needed to hold in order to set a higher low here. Unfortunately, we tapped it and then we broke it. Okay, so this was kind of like how the market structure was, I guess, broken. And then I thought that we were about to break the market structure again. Unfortunately, we didn't. If we would have came up here, we would have definitely broke the market structure. And as you can see, we did actually break the high right here of this, but it didn't end up mattering, right? Because that's where I set my stop loss, and then we actually set a higher low or a lower low. So now we're trending downwards, right? So this is kind of the new downward trending channel, right? And you can even drag this out to here if you want to. This is the new trending channel. Okay, downward trending channel, right? So, with all that said, we could see this go back and retest this. Why? Okay, so the first thing that I saw, and I think a lot, like maybe a few people would have seen this, I was like, oh, okay, we might be bullish here, right? Because we have like an inverted head and shoulders forming, and that was right here before like this candle just absolutely bottomed out, right? So I was like, okay, we might be good here, right? Dead wrong. Boom, God candle downwards, right? Then we actually came back and bought this up at this support. Okay, that's great. Now, what is really I'm seeing is called an MA pattern, and this is bearish. Okay, now let me give you a little quick masterclass on MA patterns. It needs to be an M, there needs to be an A. What you want to see for a perfect MA pattern, which this one is not, I will admit, okay, but it is, we'll say maybe it's like 65%, right? For a perfect MA pattern, you would want to see this peak of the M be higher than this peak over here, right? Now, this one is slightly higher than this one. I think this peak's at like 98.5. This one's at like 98.9, right? Call it 99. So they're within $500 of each other. They need to be at recent highs on the chart. And what I mean by that is like whatever time frame you're looking at, you need to look at like the previous like 30, 60, 90 candles, right? So let's look. This is kind of the high, right? And then this is the old high. So 63 candles, right? Okay. That fits the bill. We'll say it's close enough, right? And it's close enough to the highs. Like we're within $1,000 of the highs right here, right? So that's 1%, by the way, on $100,000 asset. Then you want to see the M, the bottom of the M, be like pretty close to each other, right? Which if you measure it from the low, they're not, right? If you measure it to the low of this, but if you measure it to the candle closes, they're very close to each other, right? They're downward sloping, okay? So I would say for the candle closes, that's what I would be going with. Then you want to see this middle kind of like inverted peak be about halfway down the entire move of the very first leg of that M, right? So check, right? This is a pretty decent M. I'm not saying it's a guaranteed, like the best one you're ever going to see at all, right? But I'm saying this one's probably got a pretty high likelihood. Okay. So what you want to see after you bottom here, right? And you saw a major kind of bump. What you want to see is a retest of this bottom kind of middle portion of the M, right? Which is right here at 97K. Okay, this is where you would be shorting. Okay, now can it come up a little bit above it? Absolutely. But if it takes out one of these highs, like say it goes above 98.5 or even close, right? 98.3, I would nullify this and I would not want to be in a short there. Okay, because this MA pattern is not going to play out. Now, if you do enter a short here, and it does play out, it brings you down to $92,000. And what that $92,000 is, it gets you through this long-term trend channel, right? Which is crazy to think. It gets you below the 200, right? And if you look, the 50 is now below the 100 on the hourly chart. We know about all the bearish divergences. We have a bearish divergence on the hourly, 4-hour, daily, weekly, monthly, you name it. There's a bearish divergence, like a long-standing, long-term one, right? So this is it's a pretty solid place to short, especially if you got shaken out like up here by like $200 like I did. I literally got shaken out like right here of my short position, and I could have rode it all the way down here. So whatever. We're looking for another entry, right? Because the trend seems to be it's going to continue downward, right? Especially whenever you see this, okay? This trend channel, okay? And guess where that M hits us? Right to, right under these previous lows, right? And to the middle of this channel, okay? So I'd be looking for like a retest of this, and that's where I would be entering short. And then obviously I would have my stop loss probably like somewhere above this 100 MA, right? Like right here is like 98.4. So you're going to enter at like 97. You could exit, above the 50 actually. You could put it at like 97,750 or whatever. But I would actually probably enter more at 97,750 and average in. And then I would set my stop loss right up here to where these recent, kind of like swing highs were, and especially the first peak of this M. And then I would be targeting $92,000 first and foremost. Now, what does that $92,000 kind of like, what does it line up with? It lines up with some like longer, like higher low supports of this actually like macro trend right here that kind of went up. So we've already busted through a couple of these and we're sitting atop this one right here, right? Then we've got the big one at 94.5, okay? Then we've got these down here. And if this MA pattern plays out, you measure from here to here, right? And then you copy and paste that to where the break point would be, which would be probably about right here. Let's call it right there. And boom, move this up. That way we can just be more conservative. And it's going to put you at about a 92.5 conservatively, call it $93,000 target. Now, if you lose 92.5 here, you're going to 92. And then if you lose 92, it's like a free fall to like 89.5, 89.7. Okay. So this 86K down here can still be in play because you've only got 1, 2, 3, and then 4. That's your fourth support that gets you to 86K. And then here's 85, right? So there's 4 supports in between you and essentially this price target, right? Maybe 5. Okay. So it's just something to think about, something to look at. And we already know, if you watched my video that I posted yesterday about this rounded top, the cup and handle, the inverted cup and handles, things of that sort, right? If you look at these, boom, I mean, we kind of broke out of it. So guess where that 97.5 area is? At the retest of that cup and handle, or that inverted cup and handle. And that takes us down to 90,766. So that's why I'm saying, like, on this MA pattern, I would be looking to enter here at about 97K and then probably in the 97,750 range on a retest of this handle, right? So that's kind of what I'm looking at right now. And there's other reasons why I'm looking at this, right? So let me get this inside of my cup and handle folder really quick before we move on, because you need to keep your charts clean and organized, right? So let's take this cup and handle and this MA off. And I just want to do some analysis on the actual moving averages, right? So if you look at these moving averages, you've got the 100 above the 50, which is above the 20, which is above the 9, and the 200s all the way down here trending up still, right? So this is forming a bearish pattern, right? And that's fine. It'll work its way up, right? So if we go to the 1 minute, well, let's do bottom up analysis, right? So you've got the 200, which is above the 20, and the 50 is now curled back above the 100, which is great. But if this 100 goes back above the 50, that's a bearish formation. So this one's kind of like indecisive. Even though the 100 is trending downwards, we're trying to reclaim it and reclaim the 50. And if that's the case on the 1 minute, we'll be looking, we'll just call it a little bit better, right? So let's look at the 5 minute next and see what it's doing. See if it's got a bearish formation, which it probably does, to be honest. Yeah, so the 200's above the 1, which is above the 50. The 20's all the way down here. The 9 finally kind of like reclaimed it. But if we keep going down, we're going to have to come back up here and test this 50. Guess where this 50's at? $97,000, right? And my guess, we probably get rejected there. Okay, so this is still a pretty bearish look for the moving averages. Okay, so now you've got your 50s above your 200. And guess where the support, or guess where those resistances are? 97.5 97.7, 97.8, right? Which is kind of where I was telling where those entry points could be, that secondary entry point on the MA pattern. Now your 9 and your 20 are down here. This is not good. Your 50 is curling down towards your 200. So once it crosses, not good. And then if the 200 goes above that 100, that's a full bearish, terrible, what you don't want to see. So same thing's probably happening on the 15-minute or on the 15-minute. Yep. So the 9 is the lowest, 20. And then if the 100 stays down here, it's going to have to go above the 50, and the 50 is going to have to go below the 200. So this one's kind of like, it's not like super bearish yet, but it's getting there, right? And then you've got the 30-minute where the 200 is above the 100, which is above the 50. The 20 is coming down. This is starting to form a bearish pattern on the 30-minute. So once this 20, this pink line comes right here in between the blue and the yellow, which is the 50 and the 9, that's a bearish pattern. And we've got 97.5, 97.750, and 98,000 as resistances now. Okay. So if you watched my other video, it was kind of looking like this on that other video. And like, we did work. Like, Bitcoin can do work to get through this. And I even said, like, hey, if we set a higher high here on the hourly, we could be going up. And we did. But unfortunately, Bitcoin does whatever the F it wants to do. And bam, came right back down to the 200. So now we've got the 50 curling down, which is not like the best look. And I mean, this is looking bearish right now. So what do we need to do in order to go up? I mean, unfortunately, we've got this right here, this new downtrending channel. We got to break out of this channel. We have to break above $99,000 to go up. Okay. I'm not saying we can't do that. I'm saying there's a lot of levels in between here and there. And we're coming up on a holiday week and weekend. It's not looking great. I'm leaning more towards 86 than I am 100. That's for sure. Even though we're way closer to 100 than we are 86, I think it's easier for it to fall than it is for it to pump right now. Okay. Because of everything that's lining up on the chart. So again, I've got my order up here, $97,000 for a short. I've got 97,750 or something like that, right at this 50 moving average, right? I'll be shorting there too. And I might even short all the way up to right about here, right under this trend channel. And then bam, I'm looking for an $86,000 target on that. And that's that. So, we'll see how it goes. We'll see how it plays out. But I'm just kind of giving you the high level TA of what I'm seeing. Again, if you want to know about the moving averages a little bit more thorough in depth, if you want to know about the bearish divergences more thorough in depth, watch the video that I posted yesterday. I know it's long, but I'll point you to it because it has a lot of the information. And I'm just going to be honest, it's not worth repeating myself if everything is still the same, right? In every video, as much as I would love to like spend the time covering it all the time, I don't think it's a good use of your time. I don't think it respects your time because especially if you're somebody that's already watched that video. Secondarily, I don't think it's a good use of my time, right? To keep repeating the same things if they are still in play. Okay, so go watch that video that I did yesterday and you'll see a lot more about the moving averages, bearish divergences everywhere, and things of that sort. So with that being said, hopefully this is helpful. Um, hopefully if you got shaken out like me, you're not like too mad about it. I'm a little irritated, I'm not gonna lie, because I've got a position that could have been up thousands of more dollars and I basically got out at break even. So it's just like, yeah, that sucks, but it's better than losing $8,000 or something. You know what I mean? Because Bitcoin decided to pump, to $102,000 and you didn't set a stop loss when you went to bed. So that's exactly what I did. And, sometimes it works out, sometimes it doesn't. Sometimes you get shaken out by $200, right? I would be in so much profit right now, but we're not worrying about that. We're worrying about where can we position ourselves for the next move because there's always a next move. So with that being said, if you like content like this, I appreciate you. Make sure you smash the like button. Make sure you hit subscribe. Boom! Bang on the notification bell. If you got triggered by anything that I said in this video, drop it in the comments section, man. I appreciate you. I will see you in the next video. I appreciate you showing up for this one. Peace.